this free order block indicator can help you to easily identify order blocks, especially if you are a complete beginner. So it's very simple. All you need to do is, I'm going to show you the settings. Okay, I'm going to show you all the settings that you can possibly use using this particular indicator. Right, so what you want to do now is just go to the indicator session. So once you go there, you type in order block with signals, and you're going to see this with signals, and you're going to see this particular one. Right, so all you have to do is you apply that indicator. So once you apply it, it's going to pop up here. Okay, and this is the indicator. Shout out to Sonar Lab, shout out to the owner of this indicator. Right, I'm not the creator of this indicator, so shout out to him, but we're going to be using this for educational purpose. Now what you can do with this indicator is that you can easily use it to identify, for instance, if you are busy, all you have to do is you just come in, you can easily identify these points where the most recent order blocks, unmitigated order blocks possibly. Right, now I'm not saying you just have to use it blindly. Don't use it blindly. Okay, so you must ensure that whenever you are using this, you have a prior knowledge about it. And what you do is very simple. Once you have been able to know what price is doing, right, as in this scenario, we can see that we are currently in an uptrend. So you must first of all know exactly how to identify break of market structures. Right, so in case you don't know how to identify break of market structures, I've got some videos on my channel. All right, so all you need to do is you just come in, you can just come to my channel. All you have to do, you can just come to my channel. Right, you are going to see a lot of videos that will teach you, but this particular one will teach you how to understand, how to confirm market structure break. Right, so you can watch that particular video, you understand the differences between break of market structure and fake out. Right, so once you have been able to establish how to identify break of market structures, right, you can see all these are examples of break of market structure, but this is not significant. That video will teach you everything in detail. Right, so but in this case, this one is kind of significant. Right, so you might want to check out these areas as valid order blocks, as the indicator have highlighted. Right, now there are different ways of entry. Okay, you can't just enter based on the hard time frame because of the amount of pips that will be, if you enter just from the hard time frame. In this case, this will give you this around about 30 pips, right? And the other one about almost same 30 pips, right? And for me, 30 pips to enter a trade. So what you do is you can basically look for a lower time frame market structures. Right, you can look for a lower time frame structures for you to enter trades. Now the another good thing about this indicator is that you can actually use this on a it also shows lower time frame indicators. Okay, now there are different settings. So once you come here, you can just click on settings and you can just change sensitivity to 45. Okay, it's going to be 28 at default. Right, 28 would be the default. Right, so you can see that there are a lot of noise with the 28 order block. Right, so just change it. If you change to 50 for instance, we are going to see that we only have 2 here. So let's leave it at 45. So put it at 45. Okay, so you can choose to change the colors if you want to. Right, you want to leave it at default. Now if you go to style, you can choose to remove the boxes, but you want to ensure that the boxes is on because that's the sole purpose of this video. All right, so what you want to do next is, once you have been able to identify order blocks, right, now you've seen that okay, this is a possible point of interest that you might be interested in. All right, so what you want to do is very simple. You wait patiently for price to get in, as price have gotten here now. So basically, immediately price comes in here, you look for a lower time frame confirmations. There are different confirmations on the lower time frame which you can use, and this particular one is one of them. You want to see a continuous lower low, lower high, lower low form. Then you want to see a an immediate change of market structure, which is um, an indication that price might want to go to the upside. So what you do is you can basically wait for that break of market structure and enter there, and this is another entry confirmations. Then you target wherever you want to target, but ensure that any amount of risk to reward or pips you want to target, ensure that you have done the back testing first. Okay, so like in this scenario now, we can see that price took out liquidity to the downside, and what happened, there was a change of character here, right? So you can enter, you can choose to enter here. So on the lower time frame, the indicator should ought to show you this as an order block. Right now, you must understand that it is not every other block the indicator show you are going to take trade based off, right? So you want to take trade based on a high probability order blocks, and this is one of the way you can filter them out. Okay, this is one of the ways you can filter them out. Right, once you come to this particular level, which is the order block responsible for this break of market structure, right, you might want to enter your trade from there. Right, so this could be your bigger target, and you target the next high, and this is another entry. Right, you can possibly enter here as well. Right, this is another entry too. Right, so you can just take that as well. So ensure that whatever you do, it must have been back tested, right? And also ensure that for every other block you take, ensure that it breaks market structure fully, because if it doesn't break market structure fully, just like what is the example that I can actually give here? If it doesn't break market structure fully, it's going to fail most of the time. Okay, so it's safer that you ensure that it breaks market structure. So for instance, if you see price and price this one fail to break structure, you don't take this as an order block. Okay, it must, for it to be valid, for this to be valid, you must ensure that there is already a break of market structure. So I'm going to play this now. Like you see that there's actually a reaction. We've seen a reaction here on the 1 hour, right? But on the lower time frame, say the 15 minutes, should give you see that market structure is forming on the 15 minutes, right? Now that failed because price never broke the 15-minute structure, right? So now when you are in, price have now gone to the next order block that was available, which the indicator have marked out, and we have another one here. So if price retraces to this level, this is a possible area to look for sales. The reason is because price broke market structure here. Now that doesn't mean that you just have to enter trades once price gets there. No, you wait for further confirmations in order for for you to have a higher win rate, right? So let's go back to the 1 hour so we can see where price is. So on the 1 hour, we can see that the one that failed have been taken out, and that's one good thing about this indicator. Anyone that fails, it takes it away, and it only leave the possible ones, which are these unmitigated levels, this one, right? So possibly we should expect a reaction to the upside here, right? So going to the lower time frame, you might want to see a structural demonstration, which we are already seeing here. Now at this point, there is no real break of market structure, so you might want to be a little bit patient, right, until we see a full break, which have actually occurred here, and you can now enter your trade based on this particular order block, possibly, right? So once you have been able to identify levels like this, you will see that it actually becomes easy for you to trade the market using the smart money concept, especially if you are a beginner. Right now, look at this. Look at what price is doing now. Price came in just like the way we, we, what's it called now, we marked out, just like the way we marked. You could basically see that this was where that particular order block were, and price reacted off of it, which would have given you some pips, like 40 pips. That's if you are taking it from that level, right? But price chose to go down further to take out liquidities from these zones, right, which makes it more valid. And now there's already a break of structure, right? Now let's take this out so we can see everything clearly, which makes it more valid, right? And you see the indicator have marked out our order block for us, right? So you just have this in mind, that whenever there is, there is a liquidity takeout and a break of market structure, the now let me show you. This is one of the way you can actually identify valid levels using these indicators, now look at this zone. We can see this as the liquidity, right? Just like this zone, right? So we can see this level as this liquidity takeout. Now ensure that this liquidity takeout is the candle that is responsible for this break of market structure. So once you have been able to see that, okay, it has broken market structure, here, right? The other block that the indicator mapped out, that should be your area of concentration, should be the area you might be looking out for possible sales, right? And there are different ways you can actually enter trades based on other blocks. You can enter based on the open of the week, right? You can enter based on the open of the week, open of the body, right? Open of the body. Can enter based on the 50% of the order block, right? Now there are some people that do take the 75% of it, but I really don't, now they all have advantages and disadvantages, right? The advantage is that it reduces your risk and increases your risk to reward ratio, right? But the disadvantage is there's a possibility that you won't be tagged before price go to the upside, right? But in this case, I think you were tagged because it was more than 50% of that particular order block into the 71 to 70, 69, 71 and 72 retracement of the fee based on the order block, right? So if that's where you take your trades from, right, you can see that, let's assume that you took the trade from the 70 level, right? So and you put your risk here, that would be 14, just 15 pips, 15 pips risk, right? For me, 15 pips is really too much for me, right? I really don't take 15 pips as stop loss, right? So you can just target 1 to 3, right? Depend on you can target 1 to 3. So if you are target 1 to 3, that's about 54 pips. You would have ended in profit. And you can choose to take, because there's liquidity here more, so there are also liquidity here, right? So we could choose also target that zone, because we have liquidity here and possibly a level that price might want to reject here. Now price might not get to this zone the same day, right? So you need to define the kind of trader that you are. So if you are a swing trader, then fine, but if you are a day trader, you might not want to hold this trade to this zone, unless you want to have an overall trade running. Then in between, you might look for possible entry to trade that particular day. But in this case, you can see what price did. Price came in, tapped in, came in, retraced again, gave another opportunity to enter this trade, right? This is another opportunity to enter the trade. And I believe, look at the indicator, it marked it out right in between, and that's another possible entry. And look at it, there was a massive reaction. And the other block that was mapped out above 2, you see that price reacted from it, right? So it all depends on how you want to trade, right? Now where price reacted from this other block, could see that that's around about 30 pips. So if you are okay with that, you can actually take that and move out of the market. It's something that I know you can do. Okay, so you must also understand where the overall trend is. All right, so you can see that price is literally rejecting this other block. So this means that this zone is actually a strong level, because we are seeing that price broke structure. Why it broke structure, we see that liquidity was taken out as well. Why that is happening, we can also see that there was another liquidity takeout with this week, and a shift of market structure, which comprises of that other block, which was delineated there. And we see a first touch. Now I'm actually okay with the first touch, because the higher the mitigation, the lesser value it becomes. Okay, so the more it mitigates, the less it has value. All right, so for instance, this level we have a lower value. Why? Because it has been mitigated. It has been mitigated once. Okay, so it will have less value. It's not like support and resistance that they tell you that the higher the the rejection from that level, the stronger it is, right? So it might not always be so with other block. All right, though price came in and reacted from this zone pretty well, which is around 55 pips, which is really good. That would have given you a whole lot of money. All right, but my point is, the point is this: the point is that whenever there is already mitigation, that zone seems not to hold to be strong again, right? So for instance, if we see a possible level here, this is a possible level, right? So let me take this as an example. Now this is the first mitigation of this other block, right? And this is another mitigation, second mitigation. Now this first mitigation is stronger than this one, and if price choose to do something like this and come back, right, and come back, especially if it fails to break structure, right, this particular one is also weaker. So this one is weaker than this one. Let me ouch This one is weaker than this one. This one is weaker than this one, right? So this one is stronger than this one. This one is stronger than this one. So you might want to be careful if you want to take a trade based on this, and more careful when you want to take trade based on this. And this one tends to be a little bit stronger. Like this one is of two ways. The first is this one has a way of showing you a double confirmation that price is actually about to to continue to a particular direction. Unlike this one is kind of risky, right? But the truth is this one is more stronger than this one. Okay, especially if it is just a retracement. Unless price is working, you are trading alongside with the trend, not trading a retracement. So if you are trading a retracement or a consolidating market, it might not always work like that. Okay, so this is one of the ways you can use these indicators to identify market movement, right? So you can see that another level have been drawn, another level have been drawn in our. Now I want to point out something. Now you can see that price never made it up to this level, right? And that's why you must not be greedy, right? So like I said, I marked this area. This high might be the first level you might want to look out for as take profit. So if you are taking that level as a take profit, you will see that you have been in profit. But if you want to swing trade this, like I said, you would have done something like this. In between this your entry, you would have entered another position, right? But I personally, I don't like doing that, right? But some people do it, but I myself, I do not do it, right? But it's something that can be done, right? So you would have, made another 1 to 3 in between the 1 to 8 risk to reward ratio and so on. So we can see that another level, another bullish order block have been marked, bullish order block have been marked. Now, like I said, you don't have to take all of this blindly, okay? Ensure that you know what you are doing. Now, one of the way you can know is ensure that the level um takes out liquidity. For instance, this would be a good zone because there was a liquidity takeout here, and this would be a better level, the reason is this is the initial this is the initial source of this massive push up. We see the first mitigation here, another one here, but the good thing is all of these mitigations, they broke they broke market structures to the upside. All right, so this is exactly how you can get this indicator, use this indicator to your own advantage. It's 100% free, so go ahead and do that. Shout out to the to the coder of that indicator. Do well to like the video, and in case you want to learn exactly how to increase your win rate, watch the video on the end screen you are seeing right now.